Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Tuesday, the 28th of March, 2017, just after 2 p.m. Central Daylight Time. Well, as you can see, a small bounce in all the agriculture markets in terms of the wheat, the corn, the meal, the soybeans. But you got to remember, you're going to get a certain amount of evening up going into this Friday's key USDA report, and from there we're going to get a better handle on the size of the crops. There's already reports coming out on farmers switching between beans and corn, which way are they going to be going on that, how's the crops looking in South America, lots coming on. Cotton pretty much unchanged today. The sugar market had a false move to the upside, got up to 18.17 and then came crashing back down on the day. And we're getting a bit of a bounce on all the energies. We've gotten up actually 200 points higher than this in the Rebob gasoline. It has since slipped back, as has the rally in the crude as the market got up to 48.75 and it too pulling back quite a bit. Remember that Libya has declared a force majeure in certain parts of the country. They're going to lose a couple 100,000 barrels a day of production as militants again have stopped some of the oil movement that is going on there. But when we go to the soybean market and you just look at a weekly chart, there's nothing yet bullish. Yes, eventually corrections come out of this because the market has gone down $1.12 from high to low. Okay, that's important. On a closing basis, we're up today to 972, a half a point gain from yesterday. But look at this break. It's about 80 cents in scope, fairly large overall. And as you take a look at a daily bar chart, and each bar just represents one day, you can see what's happened. Now, we did have an inside day today. What does that mean? It's a market that doesn't take out a previous day's high or low. It's often a pause. And when it happens on a big break like this, it can be one of two things. Obviously, if it takes out the lower low, it means that the market just paused before it's going down, or it sometimes can signal that a market is ready to give a little bit of a bounce. When looking at the swing line study, which are these brown lines that I developed, what it does is it helps me to analyze, number one, is the market trending in the sense of a pattern of lower highs, lower lows, and a downtrend. If it's not, it tells me a story that, yeah, you can get these vertical moves, but you haven't had the pattern to reverse a trend. And that's what we've got. We got a higher high and a lower low, very difficult. The 18-day average of closes in the red, the line in the sand as I refer to it, is now underneath the last rally high. So even if you had a big rally, and I would call a 31-cent rally to get up to this number, big, you'd run into the resistance there before you'd clear the 10.08 3/4 level. That could be an area the pros look to sell into. More important to me is that on the break, this black line, which is the lower Bollinger Band, has acted as support each time it's been hit. Doesn't stop the market from going lower, but it's kicked prices over to the right-hand side as it's doing right now, and they have ended up continuing in that downtrend. More important to me, I look at the hierarchy of the technical signals, and when I have an oscillator called the slow stochastic that locks in a downtrend like this, it tells me that these bounces, these pauses are still very bearish in the market. So I view this as, number one, being in a bear trend. The momentum's locked in. Yes, we don't have the swing line trending, but we have the bias down because we're under the 18-day average of closes. Just as important, in the meal market, you do have the pattern of lower highs, lower lows. This is called riding the lower Bollinger Band. And when you couple it with the embedded reading, I can't begin to tell you how bearish that is. You also, a few days ago, had what's called a bearish crossover. If you'll notice, 328.80 is over 328.70. The red is over the green being the 100-day moving average of closes. The very next day it crosses under. When that occurs, you normally go for new lows. on that particular move, which is exactly what's been happening here. It's a bearish move. It gives a lot of credence on rallies, pros wanting to be short in that general area, a key resistance area. In the soybean oil market, you had a bounce today. This market has got no trend. It's got a higher high, a lower low. The bias swung back down. It's gone from a 33.94 almost to 31.50 in 3 days, and now it's getting a little bit of a bounce. Okay, but it is, when you do the crush, where you take the bean, you crush it, do you get the oil or the meal? It's the market right now that's got a little bit more demand than the meal market, which is really fighting to stay alive here. In the corn market, an interesting event today. If you look at yesterday, you had an outside day down with an embedded reading. Today, you take out the high of that. That's normally called, in fact, I always call it, a bear trap. And that could mean that prices here want to rally up even further, maybe make a run for the 18-day average of closes. Countering it for the moment, and it's only the moment, is the fact that you have the embedded slow stochastic reading, which is very powerful. But in order to make this work and keep this dominant, this market has to immediately get under 355.25. If it doesn't, you're probably going to lose that reading. So I think we're at a crux of what's going to happen. When I take a look at the wheat market, you still have the pattern of lower highs, lower lows, bearish. You have a new crossover where the 18-day average today gets under the longer-term 100. That is bearish, and if it's going to be a true crossover, this low of 418.25 should be taken out in short order. You have the embedded reading. That should stay. Lose the embedded reading, get the market over 426.25 and start rallying it. Could end up that the market's going to make a run for the combination of 435, 436. Sugar market. Today it got up just high enough to take out the last rally high of 1797, rallies right into and slightly over the 18-day average and comes down again. You're also in an oversold condition. Let me tell you what I think of this market. Very difficult to trade. It's apparently rejecting the idea of staying over the 18-day average, yet the swing line is up and you're oversold. Don't know what to do with it. Coffee market, trading in between the higher and lower Bollinger Bands. Now let's just talk about Bollinger Bands for a brief moment. Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. You don't want it to be 100%. It'll never hit the band. You want the band to be hit because it gives you an idea of where theoretical support on the downside is, theoretical resistance on the upside. Very important. Therefore, as it's riding this band lower here, it's refusing to stay very much under it. Just a sign this market's overdone to the downside, but not showing any reason to go long. In fact, it's not trending. You have a higher high and a lower low in an oversold condition. Cocoa market, today's break, interesting. Lower highs now, lower lows. I had mentioned yesterday I thought this market would have serious resistance at the 100-day average. Couldn't quite get there yet, and it's important, it's kept its bullish embedded reading. If this market's going to really roll over, you have to see the red line get under 80. Otherwise, you could just be setting up another wave to the upside after a small correction. Hard play right there, but I give the nod still to the bulls. In the cotton market, you're in a downtrend, lower highs, lower low. We don't know where this low is yet going to end up, so I'm still going to call it lower highs, lower lows. Very oversold. The most I look for right now, before we get to Friday's reports and so on, is 76.40 before support is encountered. In the cattle market, you've lost the embedded reading, did it yesterday, today's day 2, so I will be looking for price in the 18-day average to come together. The degree to me is how quick they do it, not whether they do it. And in the feeder cattle, I see the same thing. The degree is how fast they come together, not if. Now, what do I mean by not if? Means that, if it comes together way at another price, doesn't do any good. The key is to come together right away if you're going to have any real follow-through on this idea, which I expect. Doesn't mean it will happen. In the lean hogs, lower highs, lower lows. I still can't figure out this one-day rally that has collapsed since then. Remember, 3 days ago you got up to 78 and a quarter. You're now down to 72.30. What the heck changed in 3 days? Actually, 2 trading days from when that high was made, because you closed near the low of the day that day, and you have just fallen apart. I don't know. But I think some of these thinner markets, like the hogs, do get taken over by the high-frequency traders, and I expect that's the case here. Let's talk about one of the publications that Modern Trader makes available. Profitable trading strategies in any market. I think this is something for your library. And what they do, and this is how the publication looks, and we do send it to you as a PDF so you can print it out and you can scan it, do whatever you want, or just keep it this way. Price action trading, the basics, how to trade, the flat base pattern, what do you do with that? And we're getting a number of those right now. Forecasting, how to go about it. Price action trading, how to trade that. So you get the graphs, you get the basic ideas as to what's going on. Another way to learn from this. And for that, all we ask is that you get hold of us. We'll put it in your hand. We'll mail it right out to you. You can either call us. You can go to our website. You'll see a carousel of free offers. Click on there. Or you can click right up here at any point. If you're watching us on YouTube, the form will appear from there, and away you go. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow.